to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You're listening to the Financial Survival Network post-Thanksgiving Swiss referendum wrap-up and review of all of the trends that you need to know about. And it's Manipulation Monday. That means we're with Andrew Hoffman. I mean, God, there's just so much to talk about. Andy, man, what about those Mets, huh?
Mets, we'll have a separate podcast on that. I think for the first time in 5 years, I even have hope going into this year. But
man.
Look, this is a Manipulation Up Monday, by the way, for once, because as we discussed ad nauseum, and as anyone with, a handful of financial brain cells realized, the past month was all about everything imaginable being done to prevent this silly vote in Switzerland from being a yes. Frankly, I don't believe for a second that even the numbers make sense. How can you have 45% of the people in favor of it 6 weeks ago and only 22% in favor of it 6 weeks later? So regardless, it's a good thing for the world, because now the one chance for there to be any alternative for gold and silver, for there to be any bank in the world doing anything than hyperinflating is gone. But, probably the idiot financial sector would be buying Swiss francs instead of gold. And now they're going to have to buy gold eventually. And my God, I don't think we've seen tightness in the physical markets like this since 2008.
Hey, I had a webinar with Craig Hemke, Turd Ferguson,
yes.
And he said when they hit it last time, he believes that the paper price broke from the physical, and that was a warning sign. We got to that point last night, and what happened, man? I was watching last night yesterday afternoon after the Swiss referendum vote comes in. Gold is down $40 the ounce, silver's down $1.50. They're talking $14 silver. And I said, no, that's just not going to happen. I am not buying this meme for 2 seconds. I can hardly wait to hear what Andy says about it. I wake up this morning, gold is down $10 the ounce, silver's down $0.50. Now, it's 12:40 in the afternoon. Silver is up $36 the ounce. It blasted through 1,200 again. And you look at the chart, and it's parabolic for the day from 1150 up to where we are now. Silver is up 88 cents. And I don't see, I think it blasted through resistance. I think it's just going now, Andy.
Well, look, again, this is all paper games. We could tell you working at one of the largest bullion dealers, no one was selling last month, but they never do. I mean, we never get material selling ever, and certainly not, in these short bursts of algorithmic movements like we've had in precious metals forever. What happened last night was just, look, it was Sunday night, regardless of Swiss referendum. It was the Sunday night sentiment attack, which I've been writing about for years and years. 76 out of the last 77 weekends. And this was just another perfect example of it. And of course, the bad guys, they've been naked shorting and doing everything they can to get this thing not passed. And, what they wound up doing was only injuring themselves further, because the net effect of this not passing just means another destroyed currency, the last remaining vestige of potential value. And again, what's going on in the physical markets? We talk about the massive silver shortages of 2008, of 2011, 2013, 2014. You get the picture here. They're getting narrower and narrower. Sometimes without even a crisis, we're running out of silver. And right now, Rob Kirby, who's a good friend of mine. He's been following the business for years. He says that, in securing size in the Eastern Hemisphere, you're paying $1,800 minimum. Because the size doesn't exist. Look at the gold forward rates. They went even more negative today. The only time they were ever more negative in history was when the Washington Accord was signed in 1999 and took everyone off balance because everyone was short and they were desperate for gold. So, this is a surefire sign that we're literally running out. The Indians just got rid of their 80-20 rule out of the blue. No one expected that. That means an exponential increase in demand for Indian gold. China's already running at a record level compared to even last year's record level. And every aspect of physical demand in the silver market is higher than last year's record level. Last year, silver prices, paper market, down $36. This year, 36%. This year, down 20%. And yet record upon record upon record upon shortage, upon negative rates, upon mining companies going out of business. I mean, we truly, per what we said in our webinar, I believe strongly that physical silver production could fall 20 to 50% in the next couple of years because of damage that's already been done. So again, if you just forget what's going on in the world and you just look at the physical gold and silver markets, I can't imagine how anyone could be sitting on their hands right now and not trying to protect themselves.
It befuddles me, I'll tell you that, because it's, and then the money printing going on unabated. Nothing has changed there, right?
Look, Japan was even downgraded today from AA3 to A1 by Moody's. I mean, even Moody's isn't scared of downgrading Japan. Japan is going to be, I can't scream it louder, and I've been saying it for a long time, not just for the last couple of weeks. I've been saying it for 2 years. They're going to be the first world nation in hyperinflation. I mean, there's not a doubt in my mind of what the direction that these guys are headed. It's so disastrous to see their stock market hit a 7-year high today while they're being downgraded, and they just announced multi-year contraction in GDP, shows you that they're on the way to Venezuela. You realize Venezuela, whose currency, again, was devalued and is collapsing, their stock market's at an all-time high. It's the same thing. And the same thing will probably happen here if the PPT ever stops. It doesn't ever stop, which, of course, they won't. So you're going to lose your money one way or the other in these unbelievably, ridiculously overvalued markets, more than even 2000. You remember 2000? There was almost no aspect of the markets now, the equity markets, that aren't above the 2000 valuations at the peak. And that was in a better economy, and that was with no debt in the system, and that was with a stronger dollar, and that was with a global economy that had any strength at all. So it's just catastrophic what's going to happen to paper investments at these unbelievable levels of valuation for both stocks and bonds.
Yeah, there's no mystery here. As much as we'd love for things to turn out differently, this one's been written before, right?
And again, we talk about the strength of the U.S. economy, right? Which I've been all along saying is, as fraudulent and fallacious as any statistic in history. I mean, we had on Wednesday 9 pieces of economic data, 9, and all 9 were worse than expected. In fact, we saw the home sales for the last year, every month was dramatically reduced by like 10%, in some cases 30%. Remember when the August numbers came out, new home sales, and they were like 500,000? We were talking about how ridiculous it was. Well, they weren't. They were like 430,000 across the board. And then you have this weekend, the Black Friday, right? Holy cow.
Oh, did you see that? 11%.
The street was expecting it to be an up year. I wasn't. I don't see why, when every imaginable aspect of the actual economy and of the people's savings and investment have been down. But I couldn't believe an 11% drop in the 4-day Black Friday sales from last year's level, which, remember, last year was the worst holiday spending season since 2009, right after the crisis. And the thing that's the most horrible of all this, the thing that makes me so sick, with this gray Thursday, they're trying to move everything up to Thanksgiving, which in itself is so stupid because when everyone does it, there's no benefit of everyone moving it to Thanksgiving. The fact is, Thanksgiving sales, Thanksgiving Day, were up 27% versus a year ago, meaning that all the other days were down like 20% on, Friday, Saturday, and Sunday. So what was the net effect? They not only didn't get anything, and wait do you see, now that most of the spending was online, by the way, which means low margins and a lot of store closures coming up. But the fact is that they despoiled the holiday of Thanksgiving even more and didn't even get profits for it. And by the way, it shows also that the low gas prices didn't cause anyone to drive to the stores. They still sat at home and saved money.
Hey, one good thing is that hopefully, as a result, there'll be less of these Black Friday, outbreaks, civil unrest that takes place, on Black Friday. So that is a unintended consequence of the whole collapse, right?
Well, eventually there's going to be no such thing as all this Black Friday stuff, because eventually there's going to be no retail stores. I mean, again, the brick and mortar stores had dramatic declines, as they have been for years, in traffic. People are just saying, well, one, I can't. Why would I want to wait on lines for stuff? I could just buy online and have no taxes, which, of course, they're going to make all the online stuff taxable any day now. And wait to see the impact on the economy. It'll be like what happened in Japan with their economy with the sales tax. But the fact is, think of all the store closures that are going to be coming up as a result of this holiday season, and all the tens of thousands of admittedly crappy retail jobs that will be permanently lost, and all the commercial real estate that's highly leveraged and tied up in shopping centers. It's over. The paradigm of shopping at stores is over.
Yeah, it's the trend has been in place for, God, I think it's almost a decade now, where less and less people turn out for these things every year. And the proof is there were less headlines of people going nuts at these Black Friday scam events. And, this year seemed to have been the calmest Black Friday in at least the past 4 or 5 years. So,
and you know what the big reason is?
People aren't there.
Because the deals aren't so good.
Yeah. Well, people aren't there.
Because the companies are doing so badly, they can't afford to give away all their stuff like in the past.
Yeah. And honestly, you could always get a better deal on the internet than what they've been giving, other than $2 waffle irons that people have been willing to almost kill each other for.
And on top of that, the retail associations, the trade groups will tell you themselves what the days are of the year that you're going to get the best deals for everything. People know this. They're all on the internet. They all know that. People know not that you don't have to go on Black Thursday or Black Friday, whatever the heck it's called, to get the best deal. It's been overdone. It's just called an arbitrage. Too many people did it, and it doesn't work anymore. And you throw in that it's a horrible economy. 11% drop from a year ago. And you realize that what's the point of even having these sales? Sit at home and eat your freaking turkey and wait for next week. Wait for 2 weeks. I don't even think about Black Friday. I just think I want to relax with my family and maybe get a workout and get the turkey off.
Yeah, I am always one for waiting after the whole holiday thing is over and going out and buying my stuff at liquidation prices, and then hey, say to my kids, here you go. I gave you some money. Here, there's a little belated present, and they're always thrilled to see it. So, because otherwise, you just the rat race out there. Why would you want to leave your house on Black Friday?
Again, it's a keeping up with the Jones types thing. When times are good, everyone gets all excited about holiday shopping, and clearly, and this is obviously not just the case in the United States, we're in a new world now where people are into saving money and trying to figure out the simpler pleasures of life, which don't involve spending money. I think we're honestly, aside from the 1% that have made all their money from the Fed's free money printing, we're in a world right now where people are not as materialistic as they used to be. It's just that simple. The less money people have, the more they're going to think about what the best way to use it is and not be frivolous. And of course, people can't borrow anymore. They're up to their necks in debt. They have record levels of entitlements from the government, record low real employment. There's just not a capacity to spend money if you wanted to. Think about it. We're being told we're in this great recovery, 4% GDP growth the last 2 quarters, and an 11% drop from last year. 11%. That's an absolutely astonishing amount of decline. And again, we don't even know what the margins were, especially the margins that were bought online, which tend to be even more cutthroat. So my guess is this is going to be the disaster to end all disasters. And the powers that be better hope that there's even worse weather in the next couple of weeks than there was before, so they can blame it on that for the next year.
Yeah, well, it's always the weather, that. If it's too nice out, then people didn't hit the stores because it was too nice. And if the weather was too bad, they didn't hit the stores because the weather was bad. But either way, they're not hitting the stores.
Which leads us to our final topic, oil, where the powers that be, the MSM will say, well, high oil prices are great because it means the economy's strong and it means the shale oil industry is doing so well. But then when the prices fall, well, it's great because it's like a little tax decrease for the entire economy. Now, I worked 10 years in the oil business, and I wrote an article 2 years ago called Unending Energy Independence Hype. And I said 2 years ago that the shale oil is no different than any of the other millions of things, the Austin chalk, the tar sands, all these millions, the ethanol ethanol, you name it, that they said were going to make us independent. This time around, though, the shale oil is so much more deadly because thanks to the Feds taking interest rates down to zero, they have created this massive, massive subprime bubble in everything imaginable, from auto loans to home loans to, of course, shale oil financing. And now you have more than half of the entire business is underwater. And by the way, these guys don't get, if the price of oil is 68, they don't get 68. They get like 55 because it's subgrade standards and it's high transportation costs, et cetera. This is, and now 15% of all the junk bonds in this country are shale oil related. And I couldn't believe, even I read this, a third of all the S&P 500 capex is energy related, which, by the way, was in dramatic decline before the oil prices plunged this fall. So what we are going to see is, per the title of my article, which will be coming out later today or early tomorrow, I wrote Shale Oil 2015 equals Subprime Mortgage 2008. This will be one of the ugliest price wars in history. It will be one of the most horrific, collapse of investor bond and stockholder values in a sector since the 2008 collapse.
I have no doubt that you are correct. And, but I don't think that oil prices are going to stay low for long. The rest of the world is still consuming prodigious quantities of dead dinosaur juice, and they're going to continue increasing their take. So 6 months is my guess on it. But I've been wrong about these things before.
Well,
I thought they were going to pass. So.
Again, look, this fundamentals saying everything. It may be producing, quote, prodigious, but it's not growth is not increasing rapidly. I mean, there's been a massive secular decline in the U.S. Consumption of energy. Oh, yeah. And now China is in a huge recession that's only going to get worse. And, the sources, the supplies that are coming online are tremendous. It doesn't matter if there's, quote, growth. I mean, you have now Libya is coming back from what it's had. Iraq is coming back. Iran has got a ton that's ready to go. We still have these shale oil guys that still aren't done yet. They're going to be done soon. So I think what Saudi Arabia just signaled is they're going to do a price war like they did in the 1980s, which literally almost destroyed the entire U.S. Business until prices finally started going up in the mid-90s. So, I mean, unless there's this, hyperinflationary event where nominal prices go up, I personally, from my oil experience, believe that we're going to see, I'm not necessarily saying we're going to $30 or $40, which certainly will happen if we have like an economic crash, but I'm talking about prices that are well below the cost of production for most of the U.S. energy industry. In fact, I read today that for most of the industry in general, most of it needs $100 oil to support its current capex and spending programs, and the top quartile needs $130 a barrel. So what's going to happen is, again, like we saw in the 80s, a massive shift of market share back to the OPEC nations at the expense of these hundreds and hundreds of over-leveraged, overhyped shale companies that we're talking like 15% of all the junk bonds in this country. And we're talking about a potential 2008 type catastrophe in an entirely different sector, again, caused by Federal Reserve easy money.
Yep. I am afraid to say that is definitely a possibility. They're certainly unprepared for it, but just like nobody saw the oil price decline coming, or most people didn't, put it that way. Very few people saw it. I just don't see it being long term, and I think it's going back up because, the wells in Saudi Arabia and elsewhere are depleting, and there just is not that much new production coming online other than from those shale wells. So we'll see what happens.
Well, look, if the price of oil goes up, you're talking about a win-win situation where the world is literally collapsing economically. If the price of oil, for whatever reason may be, due to, quote, supply-demand factors or hyperinflation, if it goes up and goes back to $100 a barrel again in this economic environment, I can't even think of a more horrific scenario. So it's certainly a win-win situation if you're in precious metals and a lose-lose for everyone else. But my personal belief is that unless you see some unbelievable off-the-charts level of QE come out of nowhere, which, it certainly could, I find it hard to believe that the price of industrial commodities are going to have any kind of material move up from lumber to copper to oil for some time to come. But hey, that's why, we sit in our precious metals and we don't really care because they're going to go back up. My God, gold's up $50 today. I can't remember gold being up $50 in a day since 2008.
And silver is over $1.10. It's up
$1.25. Gold just went up $51. This is a very, very interesting day. Remember, they did all the smashing on the thing. It's almost like they planned with Saudi Arabia to have their OPEC meeting on Thanksgiving. The day before, they had one trading day left, a half day before the Swiss referendum. It was almost like it was planned that way. But what it's done is it's alerted the world to what they did. Everyone sees right now that gold has recovered and then some, everything that they've done for the last month. And they did so on the face of this supposedly bearish referendum, which, I never have seen anything like what we've seen in the past month. And that counts the Sunday massacre in 2011. It counts the alternative currencies destruction in April 2013. Something is going to give in a big way at some point soon.
And what about, we didn't even talk about copper. What's happened to that? Dr. Copper, probably the best leading indicator of the global economy, has been decimated. It's under $3 a pound. Hasn't been there for quite some time. Like you said, all the industrial commodities, and God.
Copper, I think, is rigged like all the others. I think JP Morgan owns a third of the copper in the world, and that's why I keep watching it. And I'm like, how come this spot price will never go under $3? It's $2.96 right now. But, you look at across the board, industrial commodities. I'm talking about far more important commodities than oil, than copper. Iron ore, cement, coal prices around the world. We're talking about massive declines, 50%, 60%, 70% declines. These are the building blocks of construction. They're all collapsing. And as for these base metals, they haven't quite fallen to the levels of the 2008, 2009, but they're down quite a lot. And you just saw last week, I think it was BHP Billiton announced a big CapEx plunge. It's no different for mining companies than it is for oil companies. You just can't find good deposits out there right now. And so they're just cutting CapEx and paying dividends and borrowing more money to pay for stock buyback. There's no growth. There's no growth in industrial commodity supply anytime soon.
Hey,
and that's a good thing because there's no growth in demand.
Well, and the Baltic dry index, that's been down. It's down 49% year to date, 36% for the year, 37. And it's heading back down to its all-time lows.
It's still sitting. I have to look at it, whereas right now it's such a strange index because there's so many factors that go into it, and particularly seasonal factors. But even when it had its up moves this year, they weren't that great. As you said, for the year, it's down enormously. And overall, the number is sitting pretty close to the all-time lows that were hit in 2008, 2009. And it's not just the Baltic Dry Index. Any major measure of international trade is sitting at or near all-time lows right now. And that's why it's so comical that the U.S. tries to portray some recovery when there is none. People are not buying stuff on Christmas. Obviously, there's no recovery out there.
Yeah. Yep. Sad, but true. So find Andy's work over at milesfranklin.com. Subscribe to his and Bill Halter's daily missives. You really don't want to miss it. They're just, hey, everybody's been saying we're stopped clock guys, write twice a day. But the day is coming where they're just going to have to admit that all the propaganda, all the hoopla, all the garbage, it's just not working anymore. And we're really entering this new, I don't want to say era, but I think it's a time when you're going to have to wake up, Andy, because you're really not going to have any choice in the matter, right?
How can anyone look at what's going on in the world across the board, economically, geopolitically, and monetarily, and not realize how close we are to the very end of this 40-year Ponzi scheme? I don't know how much more we could say, how much more we could show. It's just a matter of, I wrote that article. It's 2008 is back with one temporary exception. That is the PPT's ability to keep the stock market up, to make it look like it's not. But everything else is falling apart. And whether it's physical gold and silver or some other black swan that comes out of nowhere or an utter collapse in a market or a currency, it's going to show up in spades. And if you haven't protected yourself, it's too late. We tried our best.
Yeah, that's really what it comes down to. Hey, so make sure you go take a look at financialsurvivalnetwork.com. Articles from all over the world trying to get at the truth, not at the memes that the mainstream media is perpetrating. And sign up for our free newsletter. Got something coming out very shortly. Andy, we will talk with you again next Monday. Be well.
I look forward to it. Thanks.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.